Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is What's Hot, a show that truly focuses on the biggest buzz on the D Street every day. Today's focus will be on IPOs. The big question that we are asking today is that are expensive IPOs a trap for retail investors? Indian IPO market has remained one of the busiest pockets of equity landscape in 2025, powered by offerings from fintechs, digital-first businesses, renewables, consumer-facing players, and many more. However, beneath the surface of enthusiasm lies a more sobering trend. Only a limited number of IPOs in 2025 have created durable value and wealth for investors. 1/3 of 2025 IPOs have listed below the issue price, and therefore the question is, should retail investors rethink their strategy when it comes to IPOs? Of the 92 main board listings that we've already seen in 2025 so far, 32 have closed below their respective issue prices on the debut day, signaling that 1/3 of the new issuers failed to match listing expectations even after robust subscription numbers as well. We will of course focus on some of the biggest recent listings that we've seen. Groww IPO, that has seen 2 days of a substantial fall after a 90% surge in its price post-listing. Today, the stock is again buoyant. We will focus on Physicswala. Again, post-listing with a 40% premium, we have seen that the stock declined for 2 straight sessions, wiped out about 8,500 crore rupees of market cap, and yet again is looking to pick up some pace. So the big question will be how to really analyze such big names, big IPOs, solid businesses, but at the same time, do the valuations at which they come for IPOs justify their promises, their earnings, their fundamentals, and for retail investors, what is it that they must clearly know about as well? You can clearly see another new listing that's taking place on your screens when it comes to the NSE today. And this new IPO is Capillary Technologies IPO that we have seen. The shares have listed on the bourses as well at 572 rupees on the NSE is what we are given to understand. Now remember, the price band was 549 to 577 and it's exactly listed at 577 on the BSE. So a flat listing for Capillary Tech that we have seen in trade today. Now remember, this IPO was a 877 odd crore rupees IPO, of course a combination of both fresh issue as well as an offer for sale as well, and the company also got strong subscription figures when it comes to retail, QIB, NII portion as well, but the listing has been absolutely flat. In fact, on NSE, it is at a discount. So all those investors who got even Capillary Tech shares in their portfolios at the rate of 577, they are in for a disappointment because the listing tick is below that, at least for now. So it's a discount to a flat listing for Capillary Tech. These kind of IPOs and these kind of listings further our focus on the IPO space today. Let me welcome our guest who will be helping us analyze this entire issue. Mr. Prashant Mehta joins in from Mehta Equities to give us a broad understanding of what is it for all our investors to keep an eye out as well. Hi Prashant, how are you? Good to have you with us on this very platform. I want to begin by understanding from you a broad perspective first. We've seen almost 92 companies come up with IPOs in 2025. 1.5 lakh crore rupees has been raised as funds via these IPOs. And traditionally, it's the retail investors who are always made to think or who have this entire thought that IPOs give me an early entry and therefore they rush towards any new opportunity that comes in. It is because of this growing appetite that more and more companies want to tap this, easy liquidity that's available in the market. But at the same time, many a times, like we pointed out, 1/3 of the issue listed below the issue price, case in point even today's listing, Capillary Tech as well. And many of them have also performed substantially high on the day 1 or day 2, 3, but thereafter have substantially fallen as well. And that's the stark reality there. How are you looking at the IPO space from a broad lens?
Very good morning, Sakshi and the viewers. Yes, you rightly raised the right question at this point of time when there are like 90 plus IPOs and 1 lakh plus fundraising have been already done. And a lot of investors have been burned their fingers. And historically, if you see, whenever there is a year of boom in the IPO, one third or one fourth of the people get this kind of lesson. But again, retail investors get stuck in a lot of IPOs where they always come with the greed of making very quick money. So whenever there is a quick money kind of situation, there is a huge liquidity which is waiting for entering in the markets, and promoters as well as investment bankers try to tap this kind of liquidity, push by the investors, and they actually get it to the right valuations or a expensive valuation. See, what one should understand is valuations are most valued or most weighted parameter one should understand when putting into an IPO. So one should understand the valuation, second the business model, and then the in the market mood. So all these three factors very important factors when applying for an IPO. Again, for example, Groww, for example, Physics, which was the recent IPOs, they ran up ahead of their earnings. I think that would be main factors why in short period of time a stock which rallies from 100 rupees to 190 rupees plus, there is a big question being raised on the valuations and the earnings outlook, what the company is going to perform. So as a retail investor has to put some kind of time to read about the company, understand the industry, plus a kind of valuations where they are coming up. Is it expensive? See, there are a lot of options there. He can go and say no to this IPO and then come back to the same company once the markets get settled and all. We can get a very better valuations and all. So it's a lesson for retail investors. But again, historically, we have seen these lessons have been taught to the retail investors every time.
Okay, got that. Let's actually focus on a few stocks then and try to analyze what's really happening there of the newly listed firms, because that's truly in the buzz right now. Let's talk about Groww, the recent listing. Now, the big rally for Groww that came in after listing also did create a lot of unusual settlement problems, leading to more than 30 lakh shares landing in the exchange auction market. And that again, further moved up some questions as to what is right and what is fair. How do you analyze the supply and demand in such IPOs? True. Now, the stock had moved up nearly 90% since its listing, 94% also at one point. But because very few shares were available for trading due to the lock-in restrictions of big investors, even normal buying and selling in big quantities had become pretty difficult. And what we are now going to be understanding is that for any investor who got the IPO was definitely celebrating all while the time the stock was rising. But at the same time, 2 consecutive days of losses. Today the stock is up by another 5%. How do you understand, where is the fair price, where is the fair value for those who have invested? When should you exit and when should you continue to hold on?
I think it's a big $1 billion question for every investor who got the allotment at 100 rupees, and they were trying to ask me a lot of questions at 140, 150, 160, and even at 180 or 190 levels. They're not able to digest the profit what they did not expect, and they are getting it. So my advice for my investors was to take profits, because there will be no such kind of earnings which will match these kind of rallies. So the company cannot grow its EPS by double in just immediately for 1 quarter or 1 year. So there was some kind of rally which was ahead of their earnings. So I think that was the best way to book profits. But again, people were greedy the way how the stock was moving, and suddenly when the 30 lakh shares of Swedes come out in the market, they realized that again, yes, obviously now it is a time to book profits and all. So I think right value, it is very difficult to understand, because
Yes.
the lot of investors have already, lot of the investment bankings have done a good valuation matrix, and the 100 rupees was the right value for a stock. But now market is giving some kind of extra no value because of the market share which he has. The way how angel broking has done its rally from last 2 years, I think they are expecting the same kind of rally in the Groww also. So I think market share is playing a very important role in Groww. And now again today there is a results been expected. So that is the biggest question for everyone. What should we do right now? I think the prices are showing where 5 to 6% up today. I think there is some kind of neutral to positive results been expected in Growth. It's Q2 earnings as well as Q1 earnings. So because of their market share of 26%, obviously they have good leverages in their product portfolio, and there is a good shift from a direct mutual fund clients to the broking clients. So I think a result will be neutral to positive. That is what market is expecting right now.
Absolutely, you rightly pointed out that the key trigger for Groww after getting listed is today when the Q2 results will be posted by the company. This is the first set of earnings that the company is posting after getting listed as well. Now, of course, one part is valuation that Prashant clearly pointed out. The second part will be whether the fundamentals, whether the earnings will be able to justify the kind of move that has happened and probably indicate even any further upside from here as well. On the valuation part, let me come in first and then we can decode the earnings part as well. On valuation part, Groww is already valued at about 34 to 44 times FY25 earnings. This seems to be a clear premium to maybe a peer like Angel One that trades at 20 times, Anand Rathi that trades at 25 times. And now with the market cap above that 1 lakh crores mark compared with 61,000 crore rupees during the IPO valuation, the gap has widened pretty sharply. When peers like Angel One at 25,000 odd crore rupees, Motilal Oswal at 60,000 crore rupees is trading at far lower multiples, and therefore your understanding will be whether the market is pricing Groww, at a much steeper valuation, looking at what could be coming in. Now, probably Groww's high margins may help explain the premium. It has a net profit margin of nearly 47% compared with Angel One's 22.3%, with a net return on net worth of about 37%, again with compared to Angel One's of 20.8%. Investors are actually paying up for this fast growth, digital dominance, strong operating leverage. But the risks are also equally clear, right, Prashant? Any regulatory tightening by SEBI in futures and options could again risk any kind of profitability and whether these margins could sustain, even if at this juncture we say, okay, the profit margins are so high and therefore the premium valuation should be justified.
I think the risk will remain same for everyone. The target audience would be same for everyone again. So market is actually focusing on more on the market cap, market share with 26%. Plus, if you see the latest client addition number, I think Groww is the only one new age company which has added more clients. I think 1,35,000 clients they have added in the October month. So other everything, Angel as well as Motilal Oswal as well as Zerodha, everybody has lost clients in the last 1 or 2 months. So there is some kind of shift in the clients approach towards going into Groww. I think they are preferring Groww against the traditional brokers like Motilal Oswal or Anand Rathi or all traditional brokers. So I think some kind of shift is giving some kind of additional premium. And you rightly pointed out there are some kind of alpha margins which Groww is commanding more. So any risk in the industry is obviously that margin will be affected. But again, he will be trying to maintain the standard industry margins overall. So overall, I think the valuation will be justified on the premium, considering the way how they are adding clients month on month, considering the market share. Every 100 trades in the market, 25-26 trades are being managed by Groww. So I think that 15-20% ahead of the Angel One or the Anand Rathi or the Motilal Oswal, this company will be trading on a justified premium even going forward.
Okay, on the earnings, Prashant, what's your big expectation from Groww today?
I think top line will be justified with a positive, neutral to positive way, but there may be some kind of margin effect because H1 markets were very volatile. All the other broking companies like Angel One or Motilal Oswal or Anand Rathi, they did not sustain the top line growth. Even there was some kind of pressure in the bottom line as well as on the mid lines, like operating margins were under pressure. So overall H1 will be flat to positive. H2, the Q2 will be some kind neutral to positive again, but it will be better than all the other booking companies.
Okay. Prashant, just for the price level, at what level would you be comfortable to look at Groww, even in the listed market space as well? Right now it's trading at 166. We know that it had gone up to 190. But what price would you say that, okay, now is the right time if somebody is a long-term investor, one should look at probably dips at correction, but at what level would you be a buyer?
Any dip at 125, 135 range can be a good level to start accumulate, because we need to give some kind of 10-20% premium to the computation ahead of the Groww's presence in the market. So 125, 135, if by any case even by today, if there is some numbers which are not being accepted by the market and the stock comes down to 140, 135, 125 levels, that would be a one chance for long-term investors to play this game again, because one should understand it's a proxy again, proxy for a capital market. I don't recommend only Groww, but again, BSC should be your portfolio, Groww should be in your portfolio, Angel should also be in your portfolio, and even Motilal Oswal, Nuvama. So all these considered to be a proxy for capital markets, but Groww will have more weightage.
And what about physics wala? How would you look at that? Again, with a premium listing of 35 to 40% odd, we did see 2 days of a shot.
A great surprise for me on the listing day. The whole market was just ignoring physics wala. The market cap of 31,000 was not at all justified to me even today now. But obviously, yes, I think there is something good happening in the educational space. I think this company can try to make some kind of good returns for the investors, where historically the education companies did not do well in the Indian markets. But yes, this is a new age company. Valuations are still expensive. One should wait for a good correction once he gets into the earning phase. So market will understand the way how earnings are going to happen. Very good model, but valuations too expensive.
Valuations too expensive even at this stage. Now, every time there has been a question also posed to the capital markets regulator SEBI as to what can the SEBI do to prevent retail investors losing or being at the risk of getting trapped in expensive valuations. SEBI clearly has maintained that deciding the market cap, deciding the market valuation is for the investment bankers, for the market participants to do. What SEBI can do is to ensure that compliance is there. The companies, even recently in the interview that the SEBI chairperson has said, that what they will probably ask is that all the companies should have easy to understand language, then they put out all the information for investors to look at. But they're never going to handhold investors to really say that, okay, you should buy this, you should not buy this valuation is high or that one is not high. So the onus will particularly, come down to the retail investors itself as to whether to decide, for themselves whether this IPO is good for them or not. So help us understand, how should retail investors be looking at opportunities that keep flooding them?
I think investors should not put the blame on the SEBI for regulating these kind of price actions or market cap actions. So obviously, if I am a promoter, obviously I would like to have my company at a higher valuations, and I would like to perform well in the listing space. But again, investors should need to do some kind of in-depth research or read more on the company and understand the industry and all. So I think it's the part of the learning phase to the investors, be it retail, be it QIB, HNI, whoever it is. So the learning phase should be on the part of retail investors. Again, some kind of even the justification by the investment bankers or the promoters should also play a vital role in terms of getting into markets just to raise money or just to give exits to old investors. But I think SEBI should work something on the investment bankers or the promoters. See, whenever you come to list in the market, it should not be a 100% exit. It should be at least 20% exit, 80% on the growth capital. I think that would be a right way where SEBI can do some kind of control on the companies which are getting into listed. If the money has been raised for growth capital, I think there will be clear vision and clear compliances which will be taken care of for the company to be money to be used on a growth phase. Otherwise, a clear exit like any other companies. So obviously, the investor who is going to exit would like to have a premium most exit, and then he will be going back with good cash. And the retail investors like you and me will be suffering the next phase of post listing. So SEBI should work on the OFS part of the fundraising activity and more on the growth capital.
Okay, Prashant, one more question that keeps coming in the minds of retail investors is that, okay, if a retail investors really goes through all this discussion, speaks to a lot of fundamental experts, watches our experts also guide on the channel as well, and then takes a call that, okay, I'm not going to be participating in a particular IPO because I feel the valuation is too high at this point in time. I may not be able to generate value in the near term. But what happens at the same time is that the same retail investor is also investing in the stock markets via mutual funds, via regular SIPs as well. What we have also observed is that Indian mutual funds have invested around 6,400 crore rupees in IPOs during the July to September period, which was again a rush of IPOs that was seen in this Q2 as well. This marks a 13% increase from the previous quarter of the kind of money they invested in the IPOs. The surge in investment can also be attributed to these these consistent flows that we are talking about, SIPs and mutual funds data as well. So now the key question is, I am not participating directly, but at the same time my mutual fund is participating, and then my overall investment portfolio drags because of a particular IPO not performing. So how do you address that kind of a scenario at this point?
I think getting into markets should be two ways, obviously directly to stocks or indirectly to mutual funds or any other products in the markets. See, when we enter the market through a professional funds or professional PMS fund manager, there is some kind of conviction from the fund managers. He takes the risk to apply or not to apply. So at least there is a a little bit of a lesser risk for a direct investors who will be going on investing directly and losing a lot of his money. So whenever a fund invests, they come through the anchor investment and they have their strategies of getting exit at the right point. They have their valuation matrix. There is a team sitting when to enter, when not to enter, which stock to hold beyond the anchor investment period and all. So there is a team which is taking such kind of risk. So getting into market through that source would be a right way to approach such kind of markets rather than getting into the ocean without having an experience of swimming and all. So I think swimming through a professional way and directly swimming into ocean, it will be high risky for an investor.
Absolutely. The other important point that we've marked out for all our viewers and we would want to reiterate is that in fact it's the winning party in these IPOs has actually been the lead managers of these book builds that we have been seeing. Now, if you look at the IPO boom that has taken place, over 90 companies raising 1.5 lakh crore rupees, of which lead managers have already expected to have garnered 3,500 crore rupees. This is something that they had garnered even in 2024, and because of the number of issues now getting even more from 2024 this time, this number could also supersede going forward from here too. How are you looking at the real money makers at this point in time that seem to be the lead managers whose fee income consistently rises at this point in time, but it's the retail investor that's probably not being able to generate such a wealth for themselves here?
I think that kind of sector is making good money right now with 90 IPOs and 1.5 lakh crore. So even 1 or 2% of the value which has been raised, if you consider that as a lead manager fees, it will be like 3,000 to 4,000 crores in this year. So yes, there should be some kind of review or some kind of pressure on the investment bankers where they are actually making a neutral profit wherever the prices go up or down. So there should be some kind of accountability for them also from the SEBI side. Where if they are making money and the prices are going down below the issue price, there shouldn't be some kind of matrix where their fees should also be addressed to be paid post listing. So I think that's a big question to the SEBI or the investment bankers right now.
Okay, fair point. Let me also just understand from you on the new IPOs today, the listing that has happened for Capillary Tech. Any suggestion on that one? Have you looked at this IPO?
I think yes, the way we also look at a lot of IPOs. The last IPO was the Groww, which we recommended to everyone, and the second was the Physics Wala. After that, we did not recommend any IPOs because we were not having some kind of comfortable with respect to markets, with respect to the way how all the old IPOs have performed below the issue price. So we kept these two IPOs as a avoid list for investors, and we will be looking at post listing to these IPOs.
Okay. The other IPO that is opening today for all our viewers to really see is Sudeep Pharma IPO. From today till November 25th, this IPO will be open for subscription viewers. The price band is 563 rupees to 593 rupees per share. Lot size of 25 shares. The total issue size is about 895 odd crore rupees with the fresh issue of only 95 crore rupees from that. Any indication on how is this IPO from this space, Sudeep Pharma?
I think very decent company to get into the IPO field right now. But again, the way how markets have been focusing, I think the company will get a very decent subscription figures. But again, we were not so comfortable with the ongoing IPO market with the high liquidity. People are just going behind the grey market and all. So I think that should be the reason why we were thinking one should look at this IPO post listing. So right now we don't have no coverage on the Sudeep Pharma.
Okay, fair point. All right, for all our viewers to see that, this Sudeep Pharma company was incorporated in 1989. It's a manufacturer of pharmaceutical excipients, food grade minerals, specialty nutrition ingredients. It serves over 100 countries, and the company operates 6 manufacturing facilities with a production capacity of 50,000 million tons, also specializing in minerals like calcium, iron, magnesium, zinc, potassium, and sodium. The company supplies more than 200 products to a diverse customer base across pharma, food, as well as nutrition sectors. And the company has a strong R&D capability within the in-house labs as well. Pilot scale facilities on which are focused on mineral salts and excipients also is something that goes to their credit as well. But at the same time, one will have to look at whether fundamentally this company will continue to move forward as well. Let me also ask you, Prashantji, where exactly do you find promise when it comes to the IPO market space going forward from here? Any new IPOs that you will be keeping on your radar in the second half? There is an expectation that going forward also there will be a list of IPOs, especially from the new age tech space, that will be lining up to come in. But any particular IPO that you are keeping a close eye out on?
I think one company in the solar product power consumption space, Clean Max India Limited. I think that would be a one stock, one IPO which I am looking at. I think they're doing really great in the power, solar and wind power generation. And I think the promoters as well as the business model looks very good for me. Recently, I got that opportunity to visit their website in the Karnataka field. So I think that is the one company which I am looking very positive. And again, other stocks like many other stuff, but this is one stock which I am just remembering right now.
Okay, fair point. All right, Prashant, just to get you an over understanding on the markets as well, I hope this has given a comprehensive view to all our viewers on the IPO space. But on the markets, 127 points of a fall today after we celebrated smart moves yesterday, 26,200, and thereafter we've fallen again in trade today. What does it go on to show? We're completely lacking strength at higher levels. This would be probably the 4th instance or the 5th instance in this last couple of weeks when we would have made an attempt to cross over and probably move towards a record high level. But again, we've seen this sharp fall today.
I think the undertone remains very strong, almost kissing the all-time high. Was almost the tone was very positive. But suddenly again, global markets went some kind of negative in terms of volatility, and some kind of profit booking will also come ahead of the expectations that there will be some news from the India-US trade deal very soon. Yesterday there was a lot of rumors saying that today evening or tomorrow evening there will be announcement for the India-US trade deal. But again, absence of such kind of headlines will bring in a lot of profit booking attempts in the market. Again, 26,000 is a very crucial level. Market has to close above 26,000 on a weekly basis, on a monthly basis, which we are failing a lot of times. So I think we should see some kind of closing above 26,200 plus. Then only market will see some kind of good momentum going ahead. But again, right now, the profit booking zone, I think market can slip behind below 26,000 on today Friday closing also.
Okay, thank you so much then, Prashant, for being with us on the show today, and of course giving us all your insights on both the primary as well as in the secondary market too. Good to have you as always. The markets viewers slipped lower, 0.5% lower at the low point of the day at 26,062 at this point in time. When we look at the key movers on the Nifty, well, you will be able to spot that at least only about 8-10 stocks are in the green on the Nifty. Rest all of them have actually slipped. M&M, Eicher Motors, Maruti, Tata Motors. Auto space continues to be positive, and that's the only sectoral index that's hovering higher in the green zone in the morning trading action. Rest all of them have slipped. Metals, PSU banks, realty, all of them have dragged. Even the broader markets are down. On the Nifty, you have big losers that are coming in from Metal Pack, Hindalco, Tata Steel, JSW Steel, all down. Even Adani Ports is down in trade. But Bajaj Auto is not participating in the auto rally. It's down in trade too. You have Bajaj Finserv and HDFC Bank from the banking and NBFC space. That's also reeling under some pressure. We leave you at that, viewers. Do stay tuned with us onto Business Today Television as the markets continue the coverage as well as We will get you some answers to your questions in case you want to know about your own stocks and their current performance. You're not sure about whether you're in the right set of stocks or you have the right strategy for your stock portfolio. Well, you can definitely join in again at 12 noon on daily calls where top market experts will guide you on your stock queries. Stay tuned for that.
Acres of government land in Mundwa on the outskirts of Pune, worth 1800 crore rupees, sold for just 295 crore rupees, paying only 500 rupees in stamp duty and 30,000 as the registration fee. The buyer, Amadia Enterprises, co-owned by Maharashtra Deputy CM Ajit Pawar's son, Parth Pawar. As details of the Mundwa land deal became public, protesters hit the streets, forcing the Devendra Fadnavis government to order a probe. A 5-member committee headed by IG Registration Rajendra Muthe has now submitted its report on the land deal executed on the 20th of May. The probe indicts suspended sub-registrar Ravindra Taru, seller Sheetal Tejwani, and Digvijay Amar Singh Patil of Amadia Enterprises LLP. But it's the